Guys, I'm done. I'm done with this crypto. Once more, for God's sake, once more. Don't buy crypto because other people are buying crypto, and that's the only reason why you are buying crypto. If you don't understand it, don't buy it. If you understand pigs, then buy pigs. If you understand bacon, buy bacon. If you understand airplanes, buy airplanes. If you understand apartments, buy apartments. But if you don't understand crypto, then piss off. Or learn from me, then buy it. Hi guys, welcome to a new episode of B Vibe. My name is Mr. B, and as you know, today is the last time we talk about crypto. At least for some time. At last. I know it's... I believe you're fed up with this crypto, but I owe you something, and I owe you the things to go through, let's say, systematically over all things that you need to know about altcoins, crypto, where to find some information, how to navigate through all of this information that you have available online, and it addresses or it's somehow connected to the crypto world. So I swear, guys, today we're going to talk a little bit more about crypto, and then from next episode, I believe that we are going to switch to a completely new topic. Maybe it will be fun, maybe not. Maybe something soft, let's say some kind of management people, some psychology, some motivation, discipline. I believe I have something to say about that also. So guys, let's go where we stopped last time. We were talking specifically about Bitcoin, and we said it is a granddaddy of all the cryptos. When he goes up, everything goes up, all the other coins go up. When he goes down, he pulls all other coins with himself. And then if you want to start with crypto, if you want to start investing, then you should start with Bitcoin. And then if you invest with some other cryptocurrencies or tokens or something like that, then you should always hedge yourself, meaning that you should always invest in parallel, simultaneously, in Bitcoin while you're putting money into some other stupid crypto shit. Then let's see, and I'm going to show you a little bit more about how to navigate and how to find some information about crypto, and that's why I have my laptop today, and I'm going to share my screen and show you around just a little bit. First of all, I'm now sharing my screen. ChatGPT or any other, let's say, application like ChatGPT, doesn't matter. He is your friend. He is your best friend, and you can ask him anything. Like you can ask him, what is Bitcoin? And then he will tell you everything about Bitcoin. And it's good enough for you to read information from, let's say, ChatGPT. Then you can ask him what is layer 0 in crypto, and so on and so forth. So he will give you all the information you need to navigate at least the basic stuff about crypto. The second thing is obviously the CoinMarketCap. So as I said before, it's a Bible. You have everything about any cryptocurrency that you want to see, that you want to investigate, and you want to know more about. Also, you have something like CoinGecko. It is something similar. You can go here, press CoinGecko, and basically it has the same stuff as CoinMarketCap. I'm more used to CoinMarketCap. That's why I'm using it. I believe it's maintained by Binance, so the people who are running the Binance exchange, and you have all the information here. So you have the trending coins, you have the current market capitalization of all of the crypto that is out there. You have some indicators about the fear and greed. So are people more likely to sell or more likely to buy in general crypto? So as you can see, for now it's 20, the value is 20, so it's high and very high fear in this crypto landscape. So people are mostly selling their crypto, some news, some highlights, and so on and so forth. And then, as I said before, you have the information about all cryptos that you want to see, and then you have some kind of a search. So let's say if you want to search Trump, you have this official Trump, then you have additional information about, as I said, the total market capitalization of this coin, saying, so it is calculated based on how much coins of this tokens of this official Trump is out there times the value of those tokens, and then you have the market cap. Basically you have the trading volume in the last 24 hours, you have the total supply of these tokens, then you have information about the website. So every token or coin that is listed, you have information, you can read more about this token. That's why you have the registered official website. Then you can go here and read more about this information. In most of the cases on these sites, you can also buy or sell these tokens. Then what you have is the social media channels. So you have their links to their maybe X account, so Twitter account, maybe Facebook, Instagram, TikTok, it doesn't matter. So you have the links here. Then you have contracts. The contracts, in most of the cases, it tells you on which chain this token is running on. So if you recall, last time I was talking something about layer 0, layer 1, layer 2, and so on. So there are coins and there are tokens, crypto coins and crypto tokens. The difference is that crypto coin is something that is running on its own blockchain. So it has its own blockchain, like Bitcoin, like Ethereum, like Binance, BNB, something like Solana, Avalanche. So those are coins because they have their own blockchain that's behind and they are running on their own chain. Then is, if you recall in some of the episodes, I was saying that you could make a branch of the blockchain. You can copy it and make a branch of the blockchain and make your own, let's say, chain based upon some other existing blockchain. So if you're making a project on top of the existing chains like Solana blockchain, then those are called crypto tokens. They are not coins, they are tokens. So the main difference is coins, they have their own and their blockchain, they run on that blockchain, and the tokens, they are run on some existing blockchain like Solana, Avalanche, Arbitrum, Ethereum, it doesn't matter. So that's the difference. Of course, it's way simpler to build a new token based upon an existing blockchain. That's why in this case, let's say for Trump, you have Solana chain. So it's built on top of the Solana chain. It can be built on top of many chains. Let's say if you go back, then you have here, let's say Tether. So it's a stable coin. It's pegged to the dollar. It's one on one. So there are different kinds of contracts here. So you can see that it runs on Ethereum, on BNB Smart Chain, on Solana, on Algorand, on different kinds, on Polygons, on different kinds of chain, this token runs. And it's normal because you always, if you're selling your crypto, in most of the cases, you are going to sell it for a stable coin. So you're not going to pull out the money directly into the fiat currency, so into the USD or euro. First, you will be, let's say, exchange your crypto, let's say your Trump coin, to a stable coin like Tether, or that's USDT or USDC. And then once you have that, in, let's say in the future, at one moment, you will maybe switch or change this USDT to a fiat currency, or you will maybe spend directly this USDT or send to someone over the blockchain, so transfer the money using this stablecoin USDT. Or you will just trade with that money, so you will have it in, let's say, in Trump token, then you will sell it once the price is high, you will sell it for USDT, and then you will hold the USDT until, let's say, the Trump token goes down in price, so you will buy the dip of this Trump coin, and then it's very convenient for you to have at that moment already on your account some stablecoin that's easily exchangeable and transferable from one, let's say, token USDT that's a stablecoin to a Trump token. It's far easier to do that than to buy crypto with your credit cards, with your bank payments or something like that. It can take time. You have to pay some kind of a fee. That's why it's very, let's say, convenient to use stable coins. And that's why when you're seeing CoinMarketCap like this, you will see that the Tether is the third one based on the market cap. So it's Bitcoin obviously is the first one. It's 1.6 trillion now. Ethereum is 261 billion, and the Tether is right below Ethereum, so it's on third place. It only shows you how much money is poured into, how much people are using this Tether for everyday transactions, trading, and so on. Then, if you're seeing this CoinMarketCap page, you will see, as I said before, the name, the price. You will see what is the volatility. So did the price go up or down in the past 1 hour, 1 day, or 1 week? So you can see in 1 week the Bitcoin went down 12%. And basically, if you're looking at this 1 week information, you will see that most of the coins and tokens are red, because if Bitcoin goes down, let's say 12%, you can see that in most of the cases other altcoins, so any other coins that are not Bitcoin, they can go much more. They can fall. The volatility can be let's say more prominent for those coins. So let's say for Ethereum it's 20%, for XRP is 16%, for Solana is 19%, and so on. Obviously it's not always the case, it's not always the truth, and it doesn't apply for all of the coins. Let's say for BNB, he went down 8%, so less than Bitcoin, but nevertheless, when Bitcoin goes down, most of the crypto goes down. And you can see also very visually, if you're using, I believe it's crypto bubbles, if you're using this, you will see currently what's the status in the market. So there are a lot of these red ones, red dots. So those are the coins and tokens for which the price went down. And the green ones, they're indicating the tokens that went up in price. And the size of these bubbles indicates the amount, the percentage of the change in the price. So the higher change in the price, the bigger the bubble. Okay, guys, so I have shown you what is the crypto, let's say crypto Bible, where you can find all the information. So once more, you can search for any token or coin that you wish on this crypto CoinMarketCap. Let's say Pepe, or let's say Pepe. You can see all the information. You can see all the charts, weekly, monthly, yearly, and so on. You can see that the price was the all-time high was here. Now it's very low. You can see the contracts, so you can see it's run on Ethereum. the ratings, the wallets that support, you can see the markets, so you can see all the exchanges that trade Pepe, the centralized exchanges and decentralized exchanges, and so on. Also on the right side you have different information from the community. Are they bullish, are they bearish on the Pepe currently, all the news and hot news regarding Pepe. So if you want to learn more about what's going on in crypto industry, in the crypto space, for some specific crypto coin or token, that's where you can go and at least have a first glimpse, a first look at what's happening and what is the global overview of this coin. So I showed you guys the CoinMarketCap once more. Then I have said what is the difference between the tokens and coins, so they are not the same. And also, if you're going to talk more about crypto, then you will see that there is something that's called cryptocurrency swap and cryptocurrency bridge. What does it mean? Well, if you're doing the swap, it means that you're transferring or exchanging one token to another, and both of those tokens are run on the same blockchain. Let's say Binance Smart Chain. So you have two tokens on the same blockchain, and then if you want to go from one token to another, then you do the swap. And the biggest representatives of the swaps are the Uniswap. So this is the decentralized exchange for doing the swaps between the tokens that are run on the Ethereum blockchain. So you select the token that you wish, token of origin, so token you want to change. Let's say, I don't know, you want to change from, it doesn't mean from Maker, and you want to go to Tether. And then you have to connect your wallet and do the exchange. Also, you can, if let's say you have two tokens that are on the Binance Smart Chain, then the most popular swapping applications is PancakeSwap. PancakeSwap. Here first you have to connect your wallet. Let's say we will connect our MetaMask wallet. Okay, I'll connect. And then you select from which token you are. So I have, let's say, this Meta Hero. I have 75 of tokens of Meta Hero, and I want to swap it for, I don't know, for BNB. And I say here maximum. It's 0.09, so the value of Hero when I bought it went drastically down from $50 to almost nothing. So this token is a piece of shit. And then it gives you the information about how many BNB tokens you will get, what is the risk, and so on. What is the fee? Because for every transaction, you will have to pay the fee. So for any exchange from one token to another, you'll have to pay some kind of a fee. Then, when we are talking about bridging, it means that if you have a token or a coin that's run on one blockchain and you want to move to completely another chain, let's say from a Solana chain to an Avalanche chain, or from Binance Smart Chain to Ethereum chain, then you will use something that's called a bridge. And there are different kinds of applications for performing the bridge activities. Let's say you have Binance Bridge. So you have BNB chain bridge. So you can do the cross change between bridges. So let's say from Ethereum to Binance Smart Chain. Once again, you connect your wallet, select, let's say, MetaMask. I will connect. And then you can swap that it's bridge from one blockchain to another blockchain, let's say from one technology to other, completely other technology. Then you say how much of Ethereum you want to send, and then you will receive your Binance Smart Chain. I'll not perform it now, but you get the picture. So there are a lot of different kinds of applications that will give you the possibility to bridge between different blockchains and to swap between different tokens in the same on the same blockchain. That's the difference. Then what you have, maybe you have heard, there is something that's called the ICO. The ICO is the initial coin offering. Basically, before the token is listed somewhere on the exchange and it can be publicly traded, before that time, the first moment that you can do that is the ICO, is the initial coin offering. But anything before that time is the, let's say the pre-seed phase or something like that, where you have some kind of a project, you have some initial people and team doing some kind of a application or something like that. And then you can, if you are following those people on some kind of social network like, I don't know, Telegrams, Discords, or something like that, you can follow some team, and then you can invest if they give you the opportunity to invest in their projects. And in most of the cases, this investment of yours will be translated into those tokens or coins at the ICO date. So if we know that it will go live and will be publicly available to trade on Monday, you will get and you will receive a certain amount of those tokens because you have invested in that project, in those people, in those teams before everyone else, before that token become publicly available and become available on different exchanges. So let's say you've shown a lot of faith into those people, and the reward is that they will grant you those tokens or coins that you will be able to sell on the first day when they go live publicly on some exchange. And that's why, let's go here. In most of the cases, let's find some examples. Some examples, let's say maybe, I don't know, Sui, say all, or let's say, yes, so this is a good example. So at the beginning, there was a lot of hype for this coin when it went public. And then when it was listed, then in most of the cases after that, after some time, you have a huge sell-off of those coins, because those people who are investing in the project, in that team before the public listing, they want to get rid of those tokens or those coins. Now, the question is, why would those people want to do that? So I would say it has to do something with the project itself. If it's something like a meme coin, so it's a complete shit, then those people who are investing before everyone else, they realize that it's completely shit and it doesn't have any kind of intrinsic value. It doesn't have any kind of utility. You cannot do anything with that coin. And the only thing that you can do is to sell on the first 1 or 2 days when there is a lot of hype, and then get out of these projects. So that's why in most of the projects you have thousands and thousands of different crypto projects. Once it's go public, most of the investors, they sell their share, their tokens, and they move away from this project. So they were inside only to get this money from the initial phase. So they were pumping the money before everyone else, and then when it go live, the price went up because of the hype, people were buying, and then those people who had a big bag of those tokens holding their hands, they were selling it once the price reached a certain amount. So because they said when we go live, I will wait for the price to go up, I don't know, 100% or 200%, and then I will sell. And that's it. And in most of the cases, you will see exactly those kinds of graphs. You have initial surge in price, then a big sell-off of these coins, and then something will happen maybe with that coin in the future, or maybe it will not increase in price ever again. And it has to do, it's very related, it has to do with what that coin is all about. If that coin or token or project, crypto project, has some real life value, some real life applications, some utility, then potentially those kinds of crypto will have increase in price along the way, because those people and those projects have some kind of the roadmap. They're communicating that roadmap. They're telling people what they can do. People are interested in the project, in the people. They're investigating. There is something going around with that project. They are on every social network and so on. And then that's some project and some token where you should focus yourself into. You should investigate more. You should pay attention on what they are saying, what they are publishing on those social networks, what they are posting and so on. And then you can see how those posts and how the new releases, new applications of that tokens or coins are influencing the price itself.